Hello everyone, this is Teddy Keckstedt from Forex Trading Unlocked, and we are here on May 20th, 2020 with a Forex Market Analysis and Live Trading webinar for you. And real quick, we want to pull up our disclaimer to remind you that this webinar is for illustrative and educational purposes only. So before we get into the meat and potatoes, just want to give you a quick plug for the book High Probable Japanese Candlestick Patterns, available on Amazon.com on paperback and Kindle versions, and we're going to go over some patterns that are going on right now in the marketplace. So without further ado, let's go to our Forex-Trading-Unlocked.com website. We have the workstation page already pulled up. We're not going to go through the numbers or oil numbers today. And, well, you know, as you can see, the dollar index has been in a little bit of a retreat going into today, and today that's also still under pressure. So right now we have dollar weakness. Now we have trades on in both binary options and also in the FX markets. We don't have any futures going on right now because we're heading into a holiday and rollover market over the next week and a half, 2 weeks. So let's see, we have an Australian dollar, US dollar, a Euro US dollar, £2 US dollars, and $1 US dollar yen trade on with various strike prices. So we'll get to these as we get to the different markets. We also have a long Euro US dollar position in the FX market, and we have a pound US dollar. Let's see. So all these options were placed on Monday. They're weekly options. Now let's go to our chart and let's see what's going on. So we have the Euro US dollar. We're going to start with that. Now, the Euro US dollar and the pound US dollar are the two biggest components in the dollar index, which has been dragging the dollar index down. And as you can see, we have our $1.1025 strike price for the Euro US dollar logged in here. So that means that we have the Euro US dollar is greater than a $1.1025 strike price. We purchased it on Monday at an average price of 16. It's trading at 29.25, so this one is a positive right now, just like so is the other one. So you can see this little orange line here. This is our target price. We're looking for it to breach that. Right now we could get out of the option, but we still have time. We have 2.5 days left, and we're looking for it to get above that strike price so we can hit our target and make more profits. So right now we're looking for that market to continue to rally. As you can see, we had made a higher move high and a higher move low recently after having made a lower move low. So our neutral posture is now becoming somewhat bullish. Now in the short run, we're obviously bullish. Long term, we're more sideways with this market, but we're looking to push the upper end of the euro strength versus the dollar. So we have that going on. Then we have the British pound, USD. There we go. Oh wait, might want to put the right symbol in. GBPUSD. Sorry about that. So that's loading up. Now remember, we have in the British pound, we have the British pound US dollar is greater than $1.2275. That's the option that we purchased for $29.75. That one is currently up at 44.25. And we also purchased a $23.75 strike price, which is a little bit higher, 15.5, and that one is actually currently lower. A little bit of time for that one. So here we have the two different strike prices in the pound US dollar. You can see the $22.75 strike, which we're hovering right at right now, and the $23.75. Now we have this downward sloping resistance that's coming into this market here that might keep it at bay. These strike prices are right below that downward sloping resistance line. So if we can get a piercing of that, that would be a good thing to help this trade out. Now, why are we along this market to begin with? Well, here we have we have a piercing line formation. You see this low that was set on Monday and how it came back and settled above the 50% mark of the prior session. That is called a piercing line buy signal. So we had been trending lower for upwards of 10 sessions, which gives us a nice trend into that signal. And that helps us to give us a reason to be long the pound US dollar. So right now our risk is at the low currently from the last break from on Monday. Let's get our one little trend line here. We need our horizontal ray. So we'll take this right here at the low. This is our risk factor right now. So yes, we are long the Forex contract as well as the options and these two strike prices, and we're looking for another pop over the next 2.5 days. For any bears, I would say be very cautious selling into this right now. Obviously, the market still is in a short-term bearish trend. But with this buy signal, we're set up for a nice little correction to the upside. So we're not overly bullish right now. We're definitely, the trend is neutral to lower. However, we have a short-term buy signal for a counter trend trade, looking for a correction to pierce this $23.75 mark over the next couple days. So there we have the top two components versus the dollar in the dollar index that are both rallying against the dollar, which is giving credence to the slide that is going on in the dollar index. But is that the only place that it's happening? Well, actually, it's not. And here's a very interesting thing what's going on. We've had a sideways market for most of the major currencies versus the dollar. Look at this. Look at the Swiss, how this is selling off today. This market has been winding its coil for the past 2 weeks, and now all of a sudden today it dropped out of bed. I mean, this is actually a very, very good indication of dollar weakness. Now, does this mean that we're becoming a dollar bear? Not necessarily, but in the short run, we're looking for us to start to press the extremes with dollar weakness and other currencies' strength versus the dollar, and maybe start to get a breakout with one of these currencies as we start to move into the summertime. Believe it or not, it's Memorial Day weekend coming up. So right now we don't have a signal here. We are waiting for a move. The move is happening, but now it's just, is it going to be just a bobble here and then reverse gears tomorrow? Because that's basically what it's done for the past 2 weeks, is break one day and rally the next day and go nowhere. But right now, it does seem that dollar weakness is pressing the curve, and we're looking for follow-through over the next couple sessions. We do not have a signal in the U.S. dollar Swiss. So like we are along the Euro U.S. dollar and the Pound U.S. dollar, we have nothing here in the U.S. dollar Swiss. There's no reason to think that this is going to continue to trend, because right now the trend is neutral. And remember, we're coming off of where the recent high was a lower move high after a lower move low. So it is slightly bearish, but as a whole, it's just a consolidation range with this currency. Now let's take a look at the the U.S. dollar versus the Japanese yen. This is one that's another reason why we're starting to lean on this bearish thought. So we had a buy signal here in the yen a week and a half ago. This is a 3 inside up pattern where we had this low that was set, and then the 2 following days they locked in the pattern. We had a nice rally. Then it went sideways. We tried to get on a move higher on Tuesday, and you can see what today is going. So we're just contained in this range. We are long the binary option at 108 quarter. We're looking for that pop. We'll see what happens over the next couple days. But as you can see, the Swiss has a big range, and the other major currencies versus dollar are pressing extremes right now. And here we have here the U.S. dollar yen. No. So the U.S. dollar is showing weakness, but not really. We have an inside day. So this is it's hard to get a read on this one. We have almost hit the target from this buy signal, but the longer we're running into this signal, the less likely it's going to hit the signal and most likely be sideways or maybe even reverse gears, especially with what's going on now. And if we have a preponderance of dollar weakness, then that may actually set the tone for a big slide yet in the U.S. dollar yen. In that same trading zone, we have the Australian dollar, U.S. dollar, which is breaching new move highs today after the past couple sessions. We have a binary strike price here at 66 and a quarter. We're just below that one right here, as you can see. We bought this one on Monday here at 16 and a half. The market's at 36.50 right now. So that's plus $20 for the contract on that move, which is already 100% return. Could get out of that right now, but we're still looking for it to breach resistance a little bit more and press the highs a little bit. So right now we're just below our strike price, and we're looking for it to take that out over the next day and a half to 2 days. This market has been making higher move highs and higher move lows. It looked like it was going to set a head and shoulders pattern because we had made this high here, higher move low, then we made a lower move high with a higher move low, setting us up for a neutral or possibly a head and shoulders break. But Monday, this market just, boom, strength came in. Australian dollar is rallying and pushing this move. Now remember, this market has been going up since the middle of March. It's one of the only currencies that has held. It was initially a correction and has actually been a trend now for 2 months against the dollar. So Australian dollar, U.S. dollar, if this continues to keep making highs, it helps to fit the mold that we're seeing dollar weakness start to come into the marketplace. Especially as we've been talking about this, we're coming into holiday markets for the U.S. We have Memorial Day weekend, and we also have option and futures expiration coming up over the next couple of weeks. You got the May options that expire, but the June is the big deal because you have June expiration for the futures. Now, not for New Zealand dollar, U.S. dollar, but you do for Australian dollar, you do for the Canadian dollar, you do for all the majors. I'd be mindful of the fact that we're coming into holiday markets. That means thin volumes. Then you have rollover, which means you have skittish moves because of the rollover of spreads. That's a whole webinar in itself. But for those of you that do watch the currencies futures, you understand rollover, and that means that it's probably a time to stay away right now, especially with the trending conditions that we have. Now, the Australian dollar, which had made new move highs, this one hadn't. This one had actually a head and shoulders formation, and it started to slide and break, and then boom, Monday, Tuesday, and now today we're back under resistance, pressing new move highs. So this is showing us that the dollar strength really has started to wane as far as the global markets are concerned. Let's go look at the US dollar TRY. Why the Turkish Lira? Because this has been a raging bull for so long, and look at this. It's probably one of the only currencies right now where the dollar is actually strong against, and it's not really strong, it's just positive slightly. The market, excuse me, has been breaking for a week and a half off of those new move highs. It really pushed this trend ridiculously high. Look at how we were back in December, November. Like, this market was in a bullish trend, but this is the biggest corrective move that we've seen in this market in 6 months. Especially coming off of this high. So is this a new trend? Well, this market's been grinding higher, hasn't been exploding higher. Markets tend to go out like they go in. I would say that maybe there's a turn in this, but more likely a correction. I'd be careful. I would look for another selling opportunity before you really start to look to be a bear with this market right now. Because if this is a corrective move, then boom, we could have this market back above 7 to 7.2 versus liras versus the dollar anytime in a very short amount of time. To go inside with this one, we have another lesser major cross versus the dollar with the Mexican peso that had this head and shoulders formation that we had breached and looked like it wanted to fall apart, and then we went sideways. But now this week has confirmed weakness. We have lower move highs, lower move lows, pressing this support today, and we're looking for it to continue. So we've taken out the neckline for the head and shoulders. How far are we going to go? Well, this is a tough one because it's one of your lesser currencies versus the dollar. So even as like the pound, the euro, and the Swiss may start to gain and maybe even spark a trend and break out of this consolidation move, the U.S. dollar Mexican peso is probably going to have divergence where it's not as strong of a currency, and especially with this run up. This had been in a bear market and then exploded in February into this range. So we'll have to keep a tight eye on this one. Right now it is showing dollar weakness. Now let's go to the U.S. dollar Canada, also in the same trading zone with the dollar. And this one too is leaking apart. We had set a low a couple weeks back, then came back and then made a lower move high. Then we made a higher move low, making us sideways and indecisive. Then we had a lower move high, which set us up for a potential slide, and that's what we have now. And we have a lower move low from yesterday. Today we have not made that, but we are leaning on support. We have this gap down here. Is that going to get filled? Well, eventually it probably will. Anytime soon? I don't know. But if dollar weakness really is going to prevail, and especially if this starts to continue to pressure support and the other currencies keep on pressing the dollar, it's a very good chance that we're going to start to see this U.S. dollar, Canadian dollar currency cross also continue to erode. Now let's go look at the Euro-US dollar where we started off this webinar and see where this is trading. So we had it still hanging underneath resistance. The bulls are there, and we're going to maintain that bullish posture. Remember, we have the 3 inside up day that was in the Japanese yen. That signal is starting to wane. It's almost run its course. And then we have the British pound, US dollar. And this is one of the ones that really gives us credence to this weakness in the dollar. As this one starts to turn, it's in a downward trend. If it can just maintain this middle part of trading range where it's been for the past month and a half, it doesn't bode well for the dollar, and especially if we can take out this downward sloping resistance that holds this trend in a neutral to bearish formation, then I think we have a good chance at seeing this pound US dollar really breach new levels that it hasn't seen in a while, which would take this 126.53 level out. But first things first, we have to get above these strike prices and close and get above this downward sloping resistance line. Until then, we are just slightly bullish, looking for a corrective move. We have our targets right here. And just to give you kind of an eyeball, and this is what worries me about trying to look at a big trend move here. Let's just say that for argument's sake that this is a pretty good range here. From the last high to this current low that we're coming off of. So looking at pretty much an extreme where we're coming into right about here, and then also right here. So just above our, right where our second strike price is, that's our target range. So we're almost there, and if we hit that, remember this is a neutral to lower trade. That would be a good spot for this correction, if it's a corrective move, to stop and then go sideways to lower. But we'll see what happens. Right now we have the buy signal, and we're going to ride it out, and then we'll see what happens over the next couple sessions. So once again, remember that we have we're long the euro US dollar and the pound US dollar in the Forex market, and then we also have for the binary options market, we have the Australian dollar, US dollar. We're long that binary, the euro US dollar binary, pound US dollar at 2 strike prices, and also we have the US dollar yen. So right now we have a mixed bag of goods. We seem to be on the right side for the most part, and we'll see how things manifest over the course of the rest of this trading week. With any luck, it turns out to be a nice little profit. So we'll see how it goes. And once again, these trading signals, if you want to learn how to trade them, because remember, this is all in behind, so you don't want to try and chase these things. But you can read the book High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions, to utilize the best buy and sell patterns used for over 400 years to give yourself a competitive edge against the markets. That's the Forex markets, the futures markets, the binary options markets, option markets, stock markets, ETFs, indexes, you name it. These signals work. You just got to read the book to find out how to apply them. So with that, I want to say thank you very much for your time. Please like, follow, and share Forex Trading Unlocked all over social media, and subscribe to our YouTube channel so you know when we're making these videos, and you can take advantage of the information that we provide for you. And you can also keep abreast of what's going on in the Forex market. So check us out every day at forex-trading-unlocked.com. I want to thank you once again for your time. You have a